Good morning, and thank you, Justin, for that market update. I'm Lynn Chase, paralegal, professor emeritus from Pikes Peak State College, and the broker owner of the Commercial Loan Arranger. And this is the #1 mortgage education channel for Colorado Springs, Colorado. So our channel is dedicated to providing the Colorado Springs community with the most up-to-date information about mortgage interest rates and mortgage programs. And I believe that knowledge of mortgages and all things real estate drives confidence, and confidence drives success in all things, but especially in terms of building wealth in Colorado real estate. So you just heard Justin tell us that the mortgage interest rate was 6 basis points better than close of business yesterday. So what does that mean in terms of what would be the interest rate on a 30-year fixed rate conventional mortgage with a 3% down from the borrower, who would have a 780 FICO credit score and would be closing this loan 22 days after the interest rate would be locked in? So how do we compare that to yesterday's rate? Well, in order to do that, you will see here that I am using the pricing engine from America's #1 wholesale lender. And as you saw yesterday, we are plugging in the parameters that I just gave you, which would be a $500,000 loan with 3% down, which means your loan amount would be $485,000. That's a loan to value of 97%. And as you can see here, we're going to use a middle FICO credit score of 780, and we're going to project this on a, well, it was like a 30-day lock just to be safe. We're going to use the compensation of the borrower paying directly for the loan originator's compensation. So when I run this pricing tool, I come away with the best option being a conforming conventional 30-year fixed at 6.445% interest. That is 0.005 better than yesterday. Yesterday was 6.500. And you can see as you look at this, when you have a breakdown of the pricing, there is no compensation being paid to the broker. Some folks would call this a situation in which the borrower is buying down the rate. I just believe it's easier to compare apples to apples, so having nothing built into the interest rate gives you a more realistic comparison. So you can see here the interest rate at 6.445 on a $485,000 loan would give you a monthly principal and interest payment of $3,048.01. And because you're only putting 3% down, there would be mortgage insurance that would cost $97 a month, and that would therefore make your mortgage payment $3,145.01. Now you have to factor in that we don't really know the address of the property when we make this pricing estimate, so we don't know what the real estate taxes would be and what that would work out to be on a monthly basis. We also don't know what the homeowner's insurance would be, And so those items are something that would need to be added as we proceed. You can see that there's also the same basic interest rate, 6.445 if you did a Home One 30-year fixed. And there is a special program and promotion that United Wholesale Mortgage Company has, in which they will loan you the 3% down payment. We call it a silent second. There is no payment on it until you sell the property or refinance. And you can see that the interest rate for that program would be 6.625. That would give you a monthly payment of $3105.51 for the principal and interest on a 30-year fixed rate mortgage, and the $97 for mortgage insurance. So there you have it. That's June the 4th's effect of the current market. And if you have any questions about how this pricing engine works, and if you would like to have a mortgage interest rate quote based upon information you provide me, please give me a call. My number is 719-360-6015, or you can simply email me at Lynn, Lynn, at ageinplacemortgagecompany.com. Thank you and have a great day.